This is Pete with Central Farm Service with a market update for May. The USDA supply and demand report out on May 12th has set the tone so far for the month, as the carryout for old crop corn was pretty close to estimates at 1.257 billion bushels, but the new crop carryout was a bit higher than expectations at 1.507 billion bushels. The stocks to use for old crop corn is at 8%. Anything under 10% gets pretty bullish, so the market has been continuing to be pretty bullish on old crop corn. However, the stocks to use for new crop corn is at 10%, and the market is viewing that as being fairly comfortable for now. Add to that the fact that China has since been canceling old crop corn sales and booking new crop sales, and this has taken the wind out of the sales of old crop corn. Also, reports from various analysts are suggesting quite a few more acres for new crop corn than what the USDA is currently using. The USDA is currently using 91.1 million acres for new crop corn, while many analysts are suggesting anywhere between 94 and 97 million acres. The higher than expected carryout, along with potentially more corn acres, was the catalyst that had the market correcting and going from overbought technical conditions to more neutral conditions recently. Also, warmer temperatures and higher chances for rain combined with an early plant has the market currently under some pressure. At CFS Randolph, we loaded a train last night and have one more for May, 3 for June, 2 for July, and 1 for August as it stands today. We are looking for a bit more old crop corn for blending, so if you have any old crop corn, let us know and we'll see what we can do. Looking at basis for corn, the river trended higher in the first half of the month but has backed off with China cancellations. Ethanol basis has been creeping higher in May, while rail basis has been mostly steady. A decent marketing strategy for old crop corn for this time of year might be to set basis and leave futures open if you think the market may go higher on a hot and dry scenario as we head towards pollination. You can put in scale-up sell orders to price the futures, which would have to be priced by the end of June. Then you can deliver the bushels now while maintaining upside potential. For new crop corn, we are recommending to be 40% sold and look to get to around 60% sold by the end of June or early July by scale-up selling DEES 21 futures. For the 2022 corn crop, we are recommending being 10% sold with an offer for another 5% on DEES 22 corn futures at 5.10. For soybeans, the USDA had slightly higher than expected carryout figures for both old crop and new crop. The U.S. carryout for old crop soybeans is 120 million bushels, with 140 million bushels for new crop. This had the market backing off from technically overbought conditions. However, the stocks to use for soybeans remains pretty bullish at 3% for both old and new crop soybeans, and this should provide for some good pricing opportunities going forward. Soybean basis levels for May at the river have been trending lower so far in the month of May, while at crushing plants the basis has been mostly steady. Rail basis has been steady to a bit higher, but still not really competitive with the river or crush. For soybean recommendations, we are suggesting to be 40% sold for new crop and look to get to 60% by mid-July by scale-up selling NOVE futures. That's it for now. Please reach out to your CFS Marketing Advisor with questions.